The interest rate for I-bonds is lower in November 2022 than for the previous period, but they are still one of the best investments right now. You can earn up to 8.19% without risk, which is not subject to state or local income taxes. Although the official rate for November 2022 is 6.89%, this is the lowest rate you can earn. You can actually earn a higher rate of return, up to 8.19%. Savings bonds are issued by the United States government. Interest is added to the bond at the start of each month, much like a savings account, which is why they are called savings bonds. Savings bonds are non-marketable securities, so they cannot be sold. Instead, both the principal and interest are paid at maturity or when the bond is redeemed. The maximum term is 30 years. Thereafter, no additional interest is earned. They can be purchased commission-free at Treasury Direct. There are two types of savings bonds, Series I and Series EE. Series EE bonds pay a fixed low rate of interest. Series I bonds pays an interest rate that is part fixed and part variable. The interest rate for Series I bonds is much higher than for the Series EE bonds. You can buy U.S. savings bonds at Treasury Direct commission-free. You can buy any amount of electronic bonds between the minimum of $25 and the maximum of $10,000 per calendar year. I-bonds are also available in paper format, with a minimum purchase of $50 up to a maximum of the lesser of $5,000 or your tax refund per calendar year, but only in increments of $50. The term of all U.S. savings bonds is 30 years. Interest is earned monthly from the first day of the issue month until the bond matures or is redeemed. However, the interest is only added to principal every 6 months from the issue date, so interest is compounded semi-annually. Bonds cannot be redeemed before 1 year, and if they are redeemed before 5 years, then the last 3 months of interest is forfeited. I-bonds usually pay a higher interest rate, but EE bonds pay a guaranteed 3.53% compounded annually if held for 20 years. Bonds are not subject to state or local income taxes. They are subject to federal income tax, but this tax can be paid annually or at redemption or maturation. This tax can be reduced or eliminated by using proceeds to pay for qualified educational expenses or by reporting interest annually instead of at redemption if income is low, such as for a child. You cannot avoid taxes by holding bonds in an IRA or other retirement account. While there is no legal prohibition, there are practical problems. As non-marketable securities, U.S. savings bonds cannot be transferred from your Treasury Direct account to an IRA. Only cash, not property, can be used for contributions to retirement accounts. Therefore, paper bonds cannot be transferred to retirement accounts. Financial institutions where most IRAs are held also do not offer the option, probably because Treasury Direct offers no option that would allow financial institutions to automate setting up a Treasury Direct account for an IRA or other retirement account, so it would not be scalable for a large financial institution to offer this option cheaply. What about a self-directed IRA? Trusts can buy savings bonds, and IRAs are a special type of trust, but the trustee must be willing to set up a Treasury Direct account. However, you cannot serve as the trustee of your IRA, even a self-directed IRA. A self-directed IRA may hold U.S. savings bonds if you can find a trustee who is willing to open a Treasury Direct account and buy them with your contributions. I could not find any self-directed IRAs that offered the option of buying U.S. savings bonds in their marketing materials. Even if it were possible, there are many disadvantages to self-directed IRAs, so for most people, this would not be a good option. Check out my video with details on how savings bonds are taxed and how you can reduce or eliminate taxes. The link is provided in the description. The interest rate of an I-bond is a composite of a fixed rate and a variable rate based on inflation. Both the fixed rate and the variable rate are set twice annually by the U.S. Treasury on the first business day of May and November. The fixed rate for individual bonds does not change over their 30-year life. The variable rate applies to all outstanding I-bonds for 6 months, regardless of the issue date, even if the government sets a new rate during the 6-month term of the bond. The I-bond variable rate is set every May and November based on the most recent 6-month period for which CPI data is available. Interest is added to the account at the start of each month, but the added interest does not earn additional interest until the next 6-month period after the issue date. Therefore, interest is compounded semi-annually from the bond's issue date. However, you earn a full month of interest if you own the bond for any part of a month. This is the formula for figuring the composite interest rate. The composite interest rate is annualized to make it easy to compare it to other investment returns. Freeze the screen if you want to study it in more detail. The equation for the composite rate has 2 terms based on the fixed rate, but the last term does not add much. However, when they become available, buying I-bonds with a higher fixed rate, even if the inflation component is lower, may be a good investment, since the fixed rate never declines over the 30-year life of the bond. These bonds earned 13.39% for a 6-month period in 2022. Not bad for a risk-free investment. Investment returns of I-bonds can be better than the stock market. The S&P 500 index was less than 1,400 in May 2000. It closed at 3615 on September 30th, 2022, an increase of 258%. Not bad, but stocks are risky. Compare that with a 382% increase of a paper I-bond purchased in May 2000, as calculated by Treasury Direct's paper bond calculator over the 22-year period ending on April 2022, free of risk. This I-bond did better than the stock market, even though there were 2 6-month periods when it paid 0% interest. Here's an example in how interest rates are applied to your bonds. You buy a bond in October. The interest rate set in May applies to your bond for 6 months. The next month, the federal government sets a new interest rate for new bonds in November, but you continue to earn the previous rate. At the end of 6 months after your purchase, on April 1st of the following year, the interest is added to your principal and starts earning interest. So interest is compounded semi-annually. The new interest rate set for new bonds in November now applies to your bond at the start of April to the end of September, regardless of the new interest rate that will be set in May the following month. Your bond will start to earn that interest in October for the following 6 months, and so on. Interest rates are annualized. The publicized interest rate is the lowest rate paid. The issue date is the first day of the month of purchase, so you earn the full interest for that month, regardless of what day of that month the bond was purchased. In the first 6-month period of a bond's term, the interest rate will be higher if the bond is purchased after the first day of the month. The actual interest rate increases steadily the later the bond is purchased during the month, up to the maximum if purchased on the last day of the month. After the first 6-month period, the interest rate will be the official rate. To illustrate this point, if you buy a bond on October 31st, then your 6-month period begins on October 1st and runs until March 31st. So you earn 6 months of interest in 5 months and 1 day. So don't wait until the start of the next month to buy bonds. Buy now. Granted, this little tip isn't going to allow you to buy a Lamborghini for your next car, but every penny earned helps. Note also that it takes at least 1 business day to buy bonds, and it may take longer if you do not already have the funds in your Treasury Direct account to pay for it. For any calendar year, these are the limits on the acquisition of savings bonds per recipient. $10,000 in electronic bonds, $5,000 in paper I-bonds. Business entities, trusts, and estates, including living trusts and estates, can purchase up to $10,000 of electronic bonds. These limits apply to each individual or entity per calendar year, whether the bonds are purchased or received as a gift. There is no limit to buying bonds as gifts for other individuals, but the total value of bonds received by the recipient cannot exceed the above limits for the calendar year. There are some exceptions to the limits on bond acquisitions. The primary exception is that bonds transferred to you because of the death of the original owner do not count toward your limit. You can buy much more than the purchase limits for your family, and if you have various entities such as a limited liability company or a trust, you can buy up to $10,000 of electronic bonds for each member of your family. Remember that each tax return is limited to $5,000 of paper I-bonds, so if you are married and file jointly, the $5,000 is your limit, but if you file separately, then your spouse can also buy $5,000 of paper bonds for a total of $10,000. You can also add up to $10,000 for each entity that you own or control. Remember that these limits apply per calendar year. As stated earlier, bonds cannot be sold. Instead, they are redeemed by the federal government. Bonds must be held for a minimum of 1 year. If redeemed before 5 years, then the last 3 months of interest is forfeited. A bond must be registered. Registering the bond determines who owns the bond and who can redeem it. The owner can specify a beneficiary, who must be a person, who will receive the bond if the owner dies. A bond may have another owner, but if one owner is a person, the other cannot be an entity. Either owner of a co-owned paper bond may cash the bond without the approval of the other owner, but most other transactions require the signature of both owners. If one owner of a co-owned bond dies, then the other owner becomes the sole owner. You can use your tax refund to buy paper I-bonds, or you can transfer some or all of your refund to your Treasury Direct account. You can use Form 8888 to allocate some or all of your tax refund to your Treasury Direct account. Although the limit on buying electronic bonds is $10,000, you can transfer more than that since you are only transferring money, which does not automatically buy bonds. You will need to do that in your Treasury Direct account. Note, however, that Treasury Direct does not pay any interest on free cash, so it does not make sense to transfer more than what you intend to buy. Paper I-bonds are sold in these 5 denominations. These bonds must be purchased in multiples of $50, since that is the smallest denomination. You can only buy paper bonds with your tax refund, which is limited to the lesser of $5,000 or your tax refund, by filling out Part 2 of Form 8888, Allocation or Refund. You do not need to open a Treasury Direct account. Just follow the instructions of Form 8888. Once your tax return has been processed by the IRS, your paper savings bonds will be mailed to you. You can buy paper bonds for yourself and 2 other individuals, but the total purchase cannot exceed the purchase limits. You can also designate co-owners or beneficiaries for the other individuals. Designate someone as a beneficiary by checking the appropriate box. You can redeem paper I-bonds at some local financial institutions or by mail. To redeem by mail, use FS Form 1522. If your paper bonds are lost or destroyed, then you can easily replace them with an electronic bond in your Treasury Direct account or receive payment for the lost bonds. Paper bonds are then invalidated by Treasury Direct. Treasury Direct has recently redesigned their website. To buy bonds, you must go to the section at TreasuryDirect.gov for savings bonds. Then you must set up an account. Click on Savings Bonds. Click Buy a Bond. Then click Open a Treasury Direct account. Scroll down to the bottom of the page. Then click Apply Now. Select the type of account. The individual account is selected by default. Click Submit. Enter your information. Check the box certifying that your information is correct. Then click Submit. Review your application. Click Submit again. To personalize your password screen, select an image. Then enter a caption that will be displayed on your password page for security. To ensure that you are on the correct site, click Submit. Enter your password and a reminder, and the answer to 3 security questions. Then click Submit. Treasury Direct will then send your account number to the email address you provided. You will need the account number and your password to log in. Here is a step-by-step guide to buying bonds. When this video was recorded, these screens were still being used, but they may change soon, since Treasury Direct did say they were going to improve their website, so screens may look different from those presented in this video, but the procedure should be basically the same. Click the Buy Direct tab. Choose the Series I radio button. Click Submit. Scheduling for a single purchase is the default selection, but you can also schedule weekly or monthly purchases, or you can specify certain dates. Enter the purchase amount. Specify the source of funds. Schedule your purchase or accept the default by clicking Submit. Review your purchase. Click Submit, then review your confirmed purchase. Treasury Direct has good videos on how to use their website and how to do the most common tasks. Just search for Treasury Direct videos, then click the appropriate link. You can see their current selection here, which will be expanded in the future. Each video is only 2 minutes long. Thank you very much for your time. If you liked my video, please give me a thumbs up and subscribe. I would appreciate any suggestions, so please leave them in the comments below. Check out my website at thismatter.com for more than 850 in-depth fundamental tutorials in personal finance, investments, and economics. Check out my books on money at williamspalding.com. Thank you.